Over the last decade, a quiet but intense debate has fractured the world of Islamic finance. A growing number of religious scholars and economists are looking at certified halal banking products and arriving at a troubling conclusion. They argue these products are simply conventional, interest-bearing loans disguised by layers of legal technicalities. This friction is documented across the pages of academic journals and debated within the boardrooms of global regulatory bodies. The stakes are massive. Islamic banks manage trillions globally. Their entire customer base relies on them to safeguard wealth while strictly avoiding riba, or interest. If the underlying contracts driving these institutions don't match their outward halal label, the entire foundation of consumer trust and the spiritual safety of millions of depositors is compromised. To understand why this matters so deeply, we have to look at the theological texts that govern these institutions. In Surah Al-Baqarah, Ayah 275, the Quran establishes an absolute distinction. Allah has permitted trade, but forbidden interest. The verses that follow, Ayahs 278 and 279, elevate the severity of this command. Believers are explicitly instructed to abandon any remaining interest, warning of a declaration of war from God and His Messenger if they refuse. This prohibition extends to every participant. According to Hadith number 1598, the one who accepts interest, the one who pays it, the one who records it, and the two witnesses, stating they are all equal in guilt. For an institution built on these principles, the mere suspicion of profiting from disguised interest constitutes an existential threat to its survival. Navigating this strict framework requires oversight. Globally, organizations like AAOFI, the Accounting and Auditing Organization for Islamic Financial Institutions, work to create standardized Sharia, accounting, and governance rules across international borders. Under their guidance, the ideal Islamic finance ecosystem relies on a specific toolkit. Contracts like Murabaha, Musharaka, and Ijara are built on tangible assets. They require genuine trade, joint ventures, and crucially, shared risk between the bank and the customer. But the modern financial market demands liquidity and guaranteed returns, which are difficult to achieve through pure risk sharing. To bridge this gap, institutions use Hiyal, legal stratagems. These complex techniques satisfy Islamic contract law on paper while navigating around its intended restrictions. This creates a structural paradox. A transaction can perfectly follow the letter of Islamic contract law while economically mimicking a conventional interest-bearing loan. To see how this works in practice, we can look at this diagram mapping out a structure known as commodity murabaha, or tawarruk. The problem it attempts to solve is simple. A customer needs a pure cash loan, but an Islamic bank cannot legally lend cash for a profit. Instead of lending money, the bank goes to a global commodity market, buys a physical asset, like platinum or palm oil, and takes ownership. The bank then immediately sells that asset to the customer on a deferred payment plan, adding a profit markup to the final price. Now the customer owns the commodity, but they don't actually want physical delivery of palm oil, so they immediately instruct a broker to sell that exact same asset back to the global market in exchange for instant cash. When the paperwork settles and the commodity fades away, we are left with the final economic reality. The customer never physically touched the asset, secured the exact amount of cash they originally wanted, and now owes the bank a larger predetermined debt over time. By linking together a complex chain of individually valid sales, the institution engineers a result that functions exactly like a conventional interest loan. This reliance on loopholes creates a vulnerability known as Sharia non-compliance risk. If these products fail ethical scrutiny, the consequences are severe. As researchers note, investors not only lose trust, but will also withdraw their funds or close their accounts for these reputational reasons. Furthermore, forcing a cash requirement through multi-stage commodity trades requires intense administration. This complexity exponentially increases legal vulnerabilities. The ultimate fallout is catastrophic. A bank faces massive reputational damage and the threat of bankruptcy if the public believes Sharia was violated. The profound irony of modern Islamic finance is that the very tools designed to make banking acceptable under Islamic law have evolved into the greatest threat to its survival. To shield themselves from this compliance risk, institutions rely on Sharia supervisory boards. These panels of scholars act as the internal frontline defense, meant to audit products and ensure that every contract aligns with Islamic principles. However, as financial engineering grows more complex, economists and academic critics are raising their expectations. They are increasingly demanding transparent, publicly available Sharia audit reports to verify how these boards arrive at their internal decisions. An internal board reviewing internal products is inherently limited. Without adequate external transparency to hold these scholars fully accountable to the public, oversight mechanisms struggle to maintain consumer trust. Recognizing this vulnerability, there is a growing push within the industry to abandon debt-like engineered products. Reformers are advocating for a return to genuine risk-sharing models, like Musharaka, where capital and enterprise merge into true partnerships. The label of an Islamic bank guarantees a specific legal structure, but as the Tawarruk loophole shows, it doesn't inherently guarantee the ethical spirit of the law. Ensuring true compliance cannot be left to paperwork alone. It requires robust product design, genuine scholarly oversight, and, most importantly, educated consumers who are willing to ask difficult questions about where their money is going. Uncovering the truth behind complex systems and holding them to their foundational principles is the core mission of Islamic True Events. If you value this kind of deep dive, make sure to subscribe, and we'll see you in the next video.